Africa Day is the annual commemoration, lest we forget that on May the 25th in 1963, the Organisation of African Unity, the OAU, was founded. On this day, leaders of 30 of the 32 independent African states signed a founding charter in Addis Ababa, Ethiopia, of course. Let's talk about investing in Africa now with Joseph Rome, Portfolio Manager at Investec Asset Management in Cape Town. Joseph, you've just come back from Nigeria. When's Nigeria going to overtake South Africa as the biggest economy on the continent? I think it's catching up.
It's catching up very rapidly. It's set to overtake South Africa in terms of GDP in the next 3 to 5 years. I'm always struck by, every time I visit Nigeria, just how much energy there is in the place, how much will there is to change. And we've been traveling to Nigeria now for most of a decade. I think the most interesting aspect is every time you're there, there's a little bit of change. It's incremental change, but it's always visible. So to give you an example, they've opened the Lekki toll road in the last 12 months. So there's less traffic congestion in Lagos. You know, we struggle to open toll roads here in South Africa. The roads are cleaner, keep getting cleaner, the people tending municipal gardens on the roads, their property development. So there's very visible change. From an investment point of view, what's been most significant for us are these big reforms that have taken place in the country. And they've been happening for a number of years. The most significant one, if you go back 4 or 5 years, was the cleanup of the banking sector. So we had a new central bank governor who came in, he declared some of the banks failed, and he cleaned up all the banks' balance sheets. He took the toxic assets and he put them into an asset management company. So that means that your banks are better prepared for the ongoing cycle. But we also saw the banks change themselves, the risk management that the banks do. So that's significant. The banks can lend into the economy again.
Which is crucial. I mean, we talk about infrastructure in Africa. We also need to develop financial infrastructure. We were terribly impressed at CNBC Africa with the delegation that was at the World Economic Forum around the corner here just 2 or 3 weeks ago. The Nigerians conducted themselves very well, and they had a very positive message, and they really stood out, I thought.
Well, you touch on, not just infrastructure, but financial deepening as well. That's one of the key themes, not just in Nigeria, but that we're investing in across Africa. And if you look at loans to GDP in a country like Nigeria, they're at 30%. In the developed world, they're over 100%. So there's huge room for bank lending growth to stimulate GDP growth, and not just at a corporate level, but at a consumer client level as well. So certainly banks are one of the key themes that we're investing in, not just Nigeria, as I mentioned, even though the Nigerian banks look particularly interesting. So banks across Africa are set to achieve very high levels of earnings growth, and they still look very, very cheap relative to regional and global banks.
Banks are an obvious one. We were speaking to the Barclays CEO based in Mozambique just yesterday, and it seems to me that if you're going to invest, if you're an overseas investor and you look at Africa, a bank is an obvious one, whether it be the Nigerian Stock Exchange or even the JSE or a couple of the other regional hubs. But you must get frustrated when you see fantastic companies and you just can't get enough stock.
So yes, liquidity is an issue, and it's probably a key constraint investing in Africa. It was about 30-40% higher in 2008 at the sort of peak of the market in 2008. So there's room for it to improve. What I'm seeing at the moment is an enormous amount of private equity activity in Africa. What this tells you is that there are a lot of companies that will be coming to market over the next 3 to 5 years, IPOs. And I'm hearing of large cap IPOs. I'm aware of 3 companies over $1 billion that are likely to come to market in Africa over the next 12, 24 months.
Is that a logical and appropriate step for an African company, though, for an overseas or private equity firm to come in and say, this is how you should do your business, we're going to build you up, we're going to take our fees and then put you on the exchange? Is that a useful sort of mezzanine level of finance and development?
We see attractions across all capital structures. So, investing on the private equity side, on the fixed income side, on the public equity side. These are all attractive from a capital perspective. Bringing these companies to market is a natural evolution for what are nascent capital markets for these companies to develop. It improves corporate governance, transparency. These are all things that we're seeing. As I said earlier, it's a slow process. One can't expect too much too quickly, but also bringing these companies onto exchange allows them to attract capital, equity capital over time. And Africa is capital short, so exposing itself to global capital by putting these companies on market is a good thing.
What about frontier markets? I mean, when we spoke a couple of weeks ago on radio, we were talking about Kenya and the relatively smooth electoral process that has just occurred. What about frontier markets as well? Is there any ones that really stick out? You're saying you've got to keep an eye on this one. We've spoken about Rwanda a lot on this particular program. Any others that really stand out for you?
So I'm focused on the frontier markets in Africa. And there are a number of markets which look interesting. So Kenya, as you say, is one. One of the things that is happening across Africa is democratization and peace and an improved political process. And I remember back to 2007 when Kenya had a very violent election. So Kenya's just had a very positive outcome. It's had an election, free and fair. And we have a government now in place, so Kenya can move forward. And Kenya is a market which is integrated with the rest of East Africa. So we're not just investing in Kenyan companies, but these are regional East African companies. Ghana would be another very interesting frontier market, very small, so not many opportunities on exchange, but increasingly they are. Ghana's discovered oil. It's growing very rapidly. It has fiscal challenges. But that's a market which over time will be increasingly interesting to us, and there are many examples across Africa like that. What often tends to happen is the areas such as the Mali or maybe Zimbabwe get a lot of the attention, but a lot of the really exciting stories get left out. So two of those would be Kenya and Ghana, as I mentioned.
Let's wrap this up now by not focusing on geographies, but focusing on sectors. I'm thinking about infrastructure spend, I'm thinking about construction companies, and we talk about financial services and mobile telephony, cellular companies, but what about construction companies? Surely there's going to be some big explosion, and several players will benefit enormously.
You're correct. Africa has a huge infrastructure deficit. So that's one of the key themes outside of financial services, resources, consumer, and telcos that we are actively investing in the fund. We look for cement companies, we look for civil engineering companies. Have a very interesting investment in Kenya. This is a civil engineering company which is doing project work, not just in mining, but in oil, building roads, doing pipes, and increasingly we're seeing opportunities like that. As government and private partnerships spend more on infrastructure, but also maybe what's interesting as a comment at this stage, increasingly we're seeing South African companies expand into Africa, and I've met with a number of the construction companies, South African construction companies in the last few months, who are increasingly building their order book with very interesting and exciting projects in Africa that are delivering very good margins.